Hey guys, this is Market Update. In this video, we're going to talk about the beginning of the end of this bull market. We're still in the mid stages, but I believe a breakout of this level, this 72,000 level, when it occurs, I think it's pretty odds on to occur. That is really the real price discovery and the mature stage of this bull market. Now that's not bad news. That can last for a year or so and be very, very good for the price. In fact, usually is. I'll show you that data right here. But that is typically the end of the bull market. Very good price movements for most cryptos, but ultimately that's the latter stages where the next stage is a bear market. So we just have to be aware of that. Bitcoin is hanging out 8% underneath its all-time high. We had that FUD from Germany and GOX. The whole thing's just recovered within a couple of weeks. Just bull market price action. We're still ranging. It's the summer. Come back in autumn probably for the next big moves, right? But this is what Bitcoin does. It ranges, it's boring, but we are consolidating at the all-time highs. I think it's just very positive. We bounced from the 200-day moving average. You can see that here. All of this is positive price action. So very positive. Central banks, especially the Fed, which is the main one, starting to get easier. The next 12 months, mature bull market and good price movements. That's what we're all here for, right? If you do trade, check out the deposit bonus to Bybit down in the description. If you are new on there, click that link. You make a deposit up to $30,000 as a deposit bonus so you can trade on Bybit. There's obviously been a lot of profit taking in crypto, and that makes sense. A lot of people maybe were buying in the bear market at much lower prices. And so as people come in and want to buy, they push the price up to incentivize those previous buyers to sell. That's a bull market. So a lot of people have done that. And you can see that from Onchain as well. But the next phase, there's another phase here. That's not the end of the bull market. I understand that individual traders will want to take profits on certain amounts because it's been a great trade from 15, 20, 25 up to 70. Great trade. But there's so much more in this bull market if you look at the cycle. So this is MVRV. Yes, it's coming down over time. You can see that, which means volatility is getting crushed on these upside moves. But this doesn't feel like the top of a bull market, right? That real top of a bull market, MVRV should really come up to what, 3.5, something like that. So we've had a big move, profit taking, and those profit takers get out, then you can actually have the foundation for that next move. The market cycle is not peaking, right? It's very clear. You can also see here, this is realized cap, UTXO age bands. So again, we actually see a lot of sellers, right? So a lot of people buying the dip essentially, or buying the bottom of the bear market, taking big profits along the way. But these short-term age bands actually sell too early, or most of the time. So you can see that here where you get a rise in the price, a lot of short-term traders getting out. They sold way too early. The price kept on going. You can see here as well, a lot of buyers here. As the price moves up, you get a lot of sellers. They sold way too early. The price had another leg. And here again, maybe so. Bitcoin's just different now though. The investors and the buyers of it are just very different than before. So this is long-term. It's not really long-term. It's, holders for over 3 years. You can see this is going up and up and up. So as Bitcoin matures, you get different type of investors in here who essentially don't have to sell ever because they have capital, right? So businesses or billionaires or people that don't actually need profits. They don't need to make money because they have businesses that do that. What they need is to preserve capital. So they need capital to borrow against because they're playing the fiat game, which is I have real assets that are worth something that are actually capital. And then I just borrow against them with this debasing fiat, which is essentially free money at that point. That's the game. And people are cottoning on to this. And this is exactly what MicroStrategy is doing. They are holding real assets, capital, and borrowing against it and leveraging against it. That's what rich people do with property and other assets. And that is what Bitcoin is perfect for. And so you're just seeing people coming into the network now who aren't trading this thing. They are buying it because it's capital and it's an asset. And then you can borrow against it. And they don't need to sell. So it's interesting to see this. But look, Bitcoin is maturing as an asset and it's nowhere near mature. Yes, returns are getting crushed a little bit, but it's still outperforming everything else. And you're seeing, I think this is important, is that it's not just a speculation. People are starting to realize this thing is actually capital and I can just hold it like property for essentially my whole life and borrow against it if I need to. That's really the way to go rather than trading it. Because why would you sell an asset? You can borrow against it, but selling it is obviously not a good idea. So I think I see that more and more from the data as well. And that's good for BTC. It's good for the price as more people want to buy it and have it as capital. What have we got ahead for the next 12 months? It is the tail end, the mature stage of the bull market. These phases, which I've put on every single cycle, have played out exactly the same as before in this cycle as well. The recovery here up into the green zone, this is the bull market, right? So if you think ahead, we've got the Fed wanting to cut rates, right? They're telling everyone that they want to be a bit easier. The Treasury has to refinance. So this is all decent for risk assets. We're in the green zone. There's no reason why the next 12 months wouldn't be decent for price. And so you can see the levels here that we may get to if Bitcoin carries on its trend. So anything 125, 150, depends how mature the bull market gets, right? But these are zones that I'd be looking at. If we're up here, that's a very mature end of a bull market. So there's not really anywhere to go at that point, right? If you're at 150K or something, there's no really anywhere to go apart from maybe a bit of a cool off. But May to September 25, it would be the typical time that you actually peak out at some point. So I think it's good news. We're in a bull market. It's great. I think there's a long way to go. Price is pretty strong, but we're in the latter stages. You can see that here. If we go into a bear market now, we've completely broken down. Bitcoin has failed, right? But everything is pointing towards a decent next 12 months for BTC. That's when the bull market usually takes place, and we don't know where it's going to get to. But look, we're in the zone. We're in the bull zone. We're in the mature bull market stage. Now I want to look at some more structural details about why BTC and actually some other assets as well. So this is the trade balance between the US and the rest of the world. You can see it's negative. It's a structural trade deficit. That's because the dollar is just too strong, right? It's the world reserve currency. Everyone has debt in that currency, and there's demand for that currency all the time, making it structurally very strong versus other currencies. That is decent for the US because it means it has basically carte blanche to just print as many dollars as it wants because there's always demand for them. Now, that's good from a political standpoint, but from an investment standpoint, it means that, well, they're just going to print lots of dollars and assets go up. So you can't be in the currency, you have to be in the assets. That's actually pretty simple. Now, this isn't good for workers in the States because essentially you're uncompetitive. The dollar's too strong. Your businesses are uncompetitive. People are going to buy goods and services from other countries that have weaker currencies. So it's a double-edged sword. You essentially have the manufacturing base getting hollowed out, but you also have the ability to just print unlimited amounts of debt, and people always will buy it because they need the currency. That's why you have this huge debt to GDP ratio. So it's two sides of a coin, but essentially currency is being printed and enlarged. The currency units are getting more and more over time. So assets are going to price that in and actually look to have performed pretty well. But are they performing well? You can see here, this is the industrial production per capita in the States, right? So it's completely over at this point, right? So unless this changes with robotics and AI or something like that, that means normal people aren't actually getting wealthier. And that's actually the problem we have, right? It's not that asset prices are going up, it's that normal people aren't getting wealthier. And that's because you're running a trade deficit and your goods and services are just uncompetitive. We can also see here that these are estimated homes to market due to the owner passing away as this big generation passes away and the new generation is actually a lot smaller. Why would house prices go up in value? Well, they're going up in the currency because the currency is being debased, right? It has to be debased. It is being debased. You can see that. So the assets are going up when valued in the currency, but the assets aren't really going up, right? Like houses aren't really making investment returns. They are pricing in the debasement of the currency, but they aren't making investment returns. You're not actually making wealth from that property. So how do you actually make wealth from investing? You invest in things that are actually growing. So we see it. It's technology and it's Bitcoin and crypto, right? Growth industries. And there are others as well, right? It's just the ones I focus on. Technology, because it is actually inventing more labor through robotics and AI and everything else. So it's actually inventing new labor. People are actually taking their wealth and paying these companies to do the stuff that they want instead of people. So rather than paying a person to do stuff, you're paying a company that actually has the labor now, which is AI, other things, robotics, right? So those companies are doing well and the people aren't doing well because they're actually getting their labor demonetized by this technology. And of course, the currency Bitcoin can actually just price all of this in and just has natural growth as well. So you have to be in these areas that are actually growing and not in areas that can't grow because they structurally cannot, like housing. Housing can price in the debasement of currency. But housing, in an economy where the economy is shrinking, the amount of people are shrinking, it can't actually generate any real wealth for you. If we look at the current investment returns as well, Bitcoin just seems like the best risk-adjusted bet over long time periods, over the short term as well. US REITs this year, so property is flat, it's up 1%. So you've underperformed inflation. Typical investment returns are about 7% a year. Coming to Bitcoin, it's up 37% now. This is actually of last week, so it's probably up around 40-45% because we had a bit of a rally. 45% is not a blockbuster year for BTC. It's actually, okay, just okay. So the next 6 to 12 months, it's not like Bitcoin is massively outperforming where it usually is. That's good because it shows us that the price is actually still pretty decent if we believe in the trend for BTC, right? For the NASDAQ, if you're investing in that, you're up 20% this year, which is above the annualized return. This thing could go nowhere for the next 6 months and still be a good year. Maybe it performs a little bit, who knows? But the NASDAQ is having a great year. Bitcoin usually performs much better. And if you're looking at the Bitcoin cycle, the price chart that I showed you, and the fact that the central bank is about to cut, the market expects that a little bit easier. Still, the best risk adjusted here looks like BTC. It looks like you could get another big move for BTC, and that would just be a normal move and not something extraordinary. So on every timeline, Bitcoin looks to me the best risk adjusted bet. It's still not, very, very highly priced in relation to its trend. If it gets there, then we can have another conversation, but everything just looks like BTC, the best risk-adjusted move right here. The price for the Crypto Investor course will be going up at the end of this month. Check the link below if you want to get involved. 300 plus videos, private Discord groups there. Bybit deposit bonus up to 30K down in the description as well. I'm James with MyDG. Cheers for watching, and I'll see you in the next one.